The phrase current assets, I often get asked what does it mean. It appears typically on the balance sheet of a set of accounts. Briefly, current assets means cash or anything that can be turned into cash within 12 months. The main types, I would say there's four main types really. There's cash, which is obvious, there's debtors, there's prepayments and there's stock. Debtors means money you're owed. So if you've done some work, you've sent someone an invoice, they owe you it, the money still, that's a trade debtor. If you lend money, I don't know, to a mate or to another business and they still owe you the money, that's another debtor. It's actually called other debtors in the accounts. That's basically debtors. Prepayments are when you've paid for something in advance but you haven't had full value for it yet. So say you've paid for a year's rent on a property in advance, maybe £6,000 for the year, you're 3 months into the year, so you've still got 3/4 of the year to go, then the prepayment is 3/4 of what you paid. Did I say 6,000? So 3/4 of 6,000 is 4,500. That would be the value of the prepayment. And you'd probably see that in the notes to the accounts. The final one I talk about is stock. There's three sorts of stock that you might see. There's finished goods, which is when you've made something to sell it. There's raw materials, which is really when you've bought stuff to use. And then there's work in progress, which is when you're in the middle of making something or doing something. Such as if you're halfway through doing someone's set of accounts, you might say, as an accountant, you might say, well, the work in progress is half the value of what we'll charge. Although all three items of stock will be valued in your accounts at the lower of cost and net realisable value. Generally that means cost, but if something has lost value below what it cost you, then they'd be valued at the sales value, the net realisable value. So that's it, current assets, cash, debtors, prepayments, stock.